everybody. It's me, the Einstein on Wall Street, here on the balcony of the New York Stock Exchange. It is an absolutely beautiful day. It is the beginning of the quarter. A little rainy here in New York, but we're here in the greatest financial institution in the world with my dear friend and my new partner with Einstein and Ives. Talk about it. Check it out here. The new podcast for Einstein and Ives, talking markets, talking fashion, food, everything you'd want to know about life, the journey, the excitement, breaking barriers, finance, tech. Forget about it. We're here to talk to you about that, to sort of take down all the things that are intimidating about all this stuff and just talking about it like you're sitting around at breakfast, having a yogurt and a banana, figuring out what's going on in the world, what's going on with the stock market, what's going on with your future, your portfolio, and how do you dress. Check this out. Dude, this is unbelievable. That's how you get the confidence. You go in, you look in the mirror, you tell yourself how much you love yourself today, and you get yourself dressed and ready to beam up, Scotty. That's what we're talking about. Anyway, I'm honored. Mr. Ives has already been on the floor here today talking to CNBC about Tesla, but he came back to speak to us because this is what we do. There's a lot going on, right? We are here. We just finished out a quarter, the first quarter of 2024. I'm still in July of 2023. I don't know about you. I don't know how we got here. It's literally the beginning of April, and we're like on this tear. The world's on a tear. Life's on a tear. Things are moving really fast. If you don't stop and just and look around what's going on, you're just gonna life's gonna pass you by. You don't want to miss this. So let's talk about it. We finished the first quarter of 2024. We are up 10% in the S&P. Literally for the last 3 to 4 weeks, we've hit a record milestone, record highs in the Dow, the S&P, the Nasdaq, and even in fact the Russell. Almost every single day. It's kind of baffling in a way. It's this irrational enthusiasm. Obviously, when markets do this, they're fast and they're furious. They're a little bit frothy, as we say, like a really nice cappuccino. You kind of get scared, like what's the next shoe to fall, right? We don't talk about maybe this is the beginning of a much higher marketplace, and Mr. Ives is going to give us a little bit of insight into that. But literally, we just finished one of the strongest quarters ever, the best quarter since 2019, record highs across the board. However, we are here in the first couple of days of April, and we're starting to see a little bit of a pullback. Mr. Ives' mastery is tech, but he has an amazing sense of the markets, of what's going on with a big overview, and I really wanted his insight in it because now suddenly that the market is starting to pull back a little. Look, one day does not make a market. We've only got 2 days into this second quarter. We are in the red a little bit. We're starting to see a little bit of a fracture or a breakdown, and I want to know why. Everybody wants to know why. The world wants to know what Dan knows. Tell us, what do you think?
Yeah, great to be here. Look, I think it's this balance because you did have massive growth from a tech perspective with AI revolution, NVIDIA, Microsoft, right. That was euphoria. But now the big worry is the soft to no landing. The question is, does Fed ultimately cut in June? Do those get pushed forward? You see oil now ticking up above 85. Yields are starting to tick up. Look, as bond yields tick up, growth names get hurt. So I think what you're seeing is investors sort of peel back a little, take money off the table, go into a 1Q earnings where maybe there's some nervousness about growth. Right. I believe this is really more of a pause, a healthy pullback, right, rather than the start of something more treacherous. But I think that's really what we're seeing coming off what's really been a robust 1Q.
Okay, so let's think about it. When markets do what this one has done, we've been on a spectacular look, the history of markets go up, markets go down. Obviously, markets will react to economic data. They will react to geo-global and rarely political, but geo-global events surely have a big effect on the market. And then we've got the components that make up the economic data. I'm a firm believer that post-COVID, a lot of these things are irrelevant. When you've got a market that can go from a bull market to a bear market in 3 hours, when you can be down 1,500 points at 11 o'clock and up 1,500 points at 4 o'clock, you've got to reevaluate the words like recession, bull market, bear market, and all of those things. So it's really important for us to analyze in this new world, in this post-COVID world, in this 2024 world, in this world where we've got this incredible AI revolution going on, and a market that surely was fueled, a big a big lot of it was fueled around the Magnificent Seven or the Elite Eight. We're calling it now.
Or the Fab
if you
Four.
throw or the Fab Four, if you want to diminish it to the Fab Four, you want to accelerate it to the Elite Eight. Whatever it is, tech has been one of the biggest fuelers, and obviously tech is a function also of interest rates. Look, it's a matter of, do you get money for free? Is the Federal Reserve lending for zero, which it did for the longest time, or now, obviously, which is one of the components in what's going on in the market, is by raising interest rates, we're pulling money out of the money supply, and that was amazingly enough. People are complaining about things being expensive, but if you think about it, we were at 8.5% inflation. We're now down to 3%. It's not a matter of where you are; it's where you came from in the inflation story, and so we're actually really doing pretty well. But let's break down where we are in a market where this amazing first quarter, a little bit of a pullback. You talked about yields, right? So my question to you is, you're more of an economist than I am. Are yields going up because the market's going down, or is the market going down because yields are going up?
The latter.
That's for the layperson.
Market's going down because yields are coming
Okay.
up. Because, look, if you take a step back, the big question is right now 3 rate cuts built into this market.
Right.
You've seen that get pushed out, given some of the worries about inflation, PCE.
Right.
But oil is a big variable. Middle East geopolitical issues.
Okay.
You're seeing oil tick up. It's hard to have inflation come down when oil is coming up.
Is oil part of the core? So there's core inflation and there's the other part. Is oil part of the core one or the other? There are two inflation numbers. Which is which?
So when they say core, and when they'll say X food and energy,
Right.
okay, that's obviously
So there's
the one.
oil, right.
But with that said, the average consumer,
Right.
unless you live somewhere non-Earth,
Right.
you're going to be impacted.
You can quote us on that. Non-Earth. We've been there.
Non-Earth?
We've
Okay.
been to non-Earth. Yeah, go ahead.
So that's going to impact inflation. I think right now, look, the Fed has engineered essentially a soft to no landing.
Right.
But what's really happening is the market's digesting now.
Right.
After a massive 1Q, it's a little kind of pause to
Right.
now see what 1Q earnings look like
Right.
from the banks,
Right.
from tech,
Right.
I think from retail. And I believe this is more of a pause that we see, and then we see in the summer a market that makes all-time highs.
Look, it's healthy for markets to have pullbacks. Those of you who are day traders, we have a trade called the trend trade. A trend trade is when a market is going either up or down for a prolonged period of time, and it pulls back to moving averages where they find support, and then it rises higher. A classic trend trade in a bullish market is when a market's going up for whether 30 minutes or a day or whatnot, and it pulls back to the 9 or the 15 exponential moving average and then moves higher. It's kind of like building a building, right? That's what we do here. We're laying bricks with good mortar. If the foundation is right and there's a good story with people and process behind it in a stock or in a market or in an economy, you will see it go higher. Let's talk about the Fed for a second. So there were 7 interest rate cuts on the table for a little while. Then we had a little bit of, so Jay Powell in his discussion, not Friday, but the Wednesday before, said a couple of things. For me, I love sitting there and analyzing every word he says. Look, if we're not cutting or raising interest rates, and that's part of the discussion when Jay Powell has these meetings, he has a news conference. And I'm saying this to traders because people will start trading in advance of his news conference thinking they have some idea of what he's going to say. You may know what he's going to say, but you have no idea how the market is going to react to it. Right? That's all that we talk about from a day trading perspective too. Look, earnings have come out and stock. We saw Adobe earnings came out. They were solid. It was good guidance. Stock went down $50. So sometimes there's no rhyme or reason to that. People need to be wary of that when you're day trading this market. Technical analysis and price action are really the keys to that. But let's talk about the Fed. So January and February, he said clearly, I'm not going to overreact to some of the hotter numbers that came out in Jan and Feb by PCE, PPI. A couple of the numbers did come out. CPI. So we saw coming into the end of 2023, we saw a steady inflation on a steady downturn going from 8.5 to 3.1, I think. Then we had that one meeting where we were looking for 2.9. It came at 3.1. There was what markets don't like are expectations that are not delivered, and the market sold off quite significantly that day.
But I would say it's like losing weight. that 30 pounds, okay,
Right.
that getting that off, maybe that's easier.
Right.
That last 5-7 pounds is
Right.
always the most difficult. And from an inflation perspective, that's essentially
So
what's
this
happening.
that last
It's
percent.
getting from the 3 to the 2.
Right.
That's the tough part.
Okay, that's interesting. So it's clear. So obviously a lot what's affecting the market is interest rates, the trajectory of us now suddenly cutting rates, right? People's fear was that we were going to be higher rates for longer. Okay, the Fed has laid out a scenario, a landscape where we are now that the job they've done, that the policy they laid out has done significant positive things to the market to get us where we are today, that we are now going to be able to start cutting rates, which is a complete flip. We're not going to sit now, but the question is, over the last couple of days, there are a lot of people, Gorman from Morgan Stanley, a number of people are saying that some of these numbers, we saw PCE come out that was not as what they anticipated. PPI, CPI number, January, February were a little bit hotter than they expected, that maybe we're going to sit with this for a little longer, that we may not see a June cut, look, he laid out a scenario. We're going to have 3 cuts in 2024. He didn't tell us when. They were going to be 75 basis points in total, which seems realistic. It seems realistic to what they're saying.
Yep.
Right, exactly. But since then, every day there's sort of there's little dribblings coming out about the fact that there are people who think that we may not have any cuts, and that maybe we should not have any cuts. That we should sit with this and let it marinate for a minute. What's your feeling?
That's really what's happening even today.
Right.
It's a soft landing, you get 3 cuts.
Okay.
A no landing, you really get no cuts.
So explain that to a layperson. What?
Because basically a soft landing would be...
So this is a soft landing coming off of with a potential recession?
Exactly. So if you go back a year and a half ago, the real fear was hard landing.
Right.
Really bad recession.
Right.
A soft landing is really not a recession. We'll just call it a down period of economic growth.
Due
that
to what
ramps
we've
back
done
up.
with interest rates?
Exactly.
Is that a function of
just
that?
because if you look at the real estate market, interest rate is essentially almost paralyzed the consumer. A no landing is basically saying that the economy is actually navigated so well,
Right.
not even dipping.
Right.
In a no landing environment, the Fed, that higher for longer,
Right.
that scenario would ultimately take place. And I think what you're seeing with yields, bond yields,
Right.
they're starting now price in maybe just a little door opening that the cuts get pushed out.
That's okay. So think about it. So what's happening with higher interest rates for longer is it affects the real estate market. It affects the ability for companies to be borrowing money. So we went for decades with money being free. Right? One of the things that's fueled this market to where it is today was interest rates at 0 for a long time. Then COVID came along, and this is all a function of COVID and the fact that they had to throw $3 trillion into the market over a 3-month period of time to get us out of that global economic pandemic, which you may remember happened a couple of years ago, and now we're trying to work our way out of it. So we have a number of scenarios on the table. 3 interest rate cuts purports one certain scenario, okay? And some people are hoping, and the Fed sort of laid out one in June. Look, we're also in an election year now, and obviously we probably don't want to throw a rate cut on the table around November, right? Is that? I mean, what's your?
I agree. I think summer, you get cuts. And
so let's say a June. So what are you thinking? A June, September, December?
That right now would probably be the dot plot.
Okay.
Okay. But also the Fed, the last thing they want to do. Let's just talk through the disaster.
Okay.
scenario.
Yeah.
They cut June. Then
25
all of a sudden,
basis points.
25 basis.
Okay.
CPI, PPI, inflation remains stubborn, starts to actually tick back up.
Right.
The last thing you want is the Fed to cut, then have to pause, or even go a little more hawkish.
Right.
Because then the credibility of the Fed is lost.
Right.
So it's very careful where they're navigating this sort of balancing act,
Right,
almost
right.
like a tight wire balancing act.
Yeah, it is.
But rather they be a little more cautious than do it too early.
Question to you. So when the Fed speaks, when Jay Powell, after his declaration of whether there'll be a number or he's holding steady, these meetings that they have every 6 weeks, which are always fascinating because for us, it creates incredible volatility. And as a day trader in this market, for me, it's like the Super Bowl. We love that kind of action. but we also sit on our hands until all the information comes out. I sit and watch, and the world watches every word that comes out of his mouth in those news conferences, because he'll often, he'll disagree with himself often. He will talk out of two sides of his mouth, although I'm a fan of his, and I think he's done a great job. Literally what he's done is used policy to get us from 8.5% inflation down to 3%, which was a huge feat in the eyes of what's going on. A banking crisis, 2 global wars. I mean, think about it, and an interest rate environment that's been controversial at best. He did say one thing that really moved the market on Wednesday, that Wednesday before. He said that we've seen the highs of interest rates. It was just a little blip, and if you're not crazy like me watching this stuff, you wouldn't have noticed it, but I was analyzing where the market was going on every comment he made, and it was just a little bit of a quote from him, but he said, ladies and gentlemen, we've seen the highs. The market took that and went with it, and we closed at a record high that day. Are you saying to me that that's in response to what you described? God forbid we cut rates, the inflation numbers get a little bit hotter, and he actually even has to consider maybe reversing once again, which he claims he will not do.
And that's why you've had dovish comments out of Powell, and the trend's heading there.
Right.
But they are going to be extra cautious to make sure that they don't cut too early. But that's why I think right now the market was at 7 cuts or 6. Now it's 3.
Right.
The dot plot is at 3.
Right.
So now you actually have a market and a Fed for the first time that agree.
Okay.
And that's good for the market. That's what's happening right now. This is a digestion period, not the start of something more onerous.
Okay, so we've got 2 days of a pullback. 2 days do not make a market, right? I mean, just think about that. When something happens for 10 days, you may look at it. When something happens for 2, after we've just had 3 consecutive months and a first full quarter of really spectacular market action across the board with a nice breadth to the rally. The rally was not all tech. Right, there was breadth to it. We did see some of the mid-cap, small-cap, Russell, some of these other names, people looking for value. So we do see a little bit of a pullback. You're saying it's a healthy pullback.
And you need to see a broadening of the market, not just Mag 7.
Right.
A broadening in tech, financials, healthcare.
Right.
That's, as you know better than anyone here, that's something that's so important to even see a market that, I believe moves higher.
Okay, so let's say he does a June cut. And I mean, it's curious because the economic data, and he always talks about it. His decision making is economic data based. We did see I think it's worth concern. I would imagine it may keep him up at night a little bit. The fact is that we suddenly did see CPI, PPI, PCE, all of these economic numbers, which are consumer numbers, consumer expenditure numbers, manufacturing numbers, all these things got a little bit hot, right? It was almost like we got there too quickly, and now we're pulling back. This is a healthy pullback in the market, even if we're a 1%, 2%, 3% pullback. That seems legit. Is that your projection?
And I'd argue for a market to go higher, you have to have pullbacks.
Yes. Right, because look, think about it. It's really frothy, right? It is, look, if you're an investor, right, and you're looking at this market, right? First of all, I don't think there's ever a bad time to invest in the market. It's a matter of your entry point into the market, and that's something you've got to decide for yourself. But people are looking at this market now, and what would you say to somebody? You obviously, you have a community. You at Wedbush, you have customers who you must advise on what to do with their money. What do you say to somebody who, let's say, is a newcomer into the market? How do you put money to work at this point where the market's trading at record highs?
First, I think it depends on your risk profile.
Right. True.
And I think that's why you want to have all the inputs, and you have the names or the sectors that you love.
Right.
And then you ultimately have certain buying points.
Right.
But I think it's one where investors need to have a longer term view.
Right.
But look, we could have more volatility as we go into earnings season.
Right.
That's not necessarily a bad thing, but it's need to understand that as a risk.
So, but you think about it too, earnings season so let's talk about Tesla. What's going on with Tesla lately?
Look, China, it's the same reason with Apple. I mean, China we've had a
Sort of got a chokehold on us in a way, right?
Well, a soft economy in China.
Right.
That's really been the key growth, not just for Tesla as well as Apple and others. You're seeing competition come into the market, electric
So it's
vehicles.
not from a manufacturing point of view, it's from a consumer point of view. You're saying that the robustness of Tesla earnings and Apple's earnings are a function of the fact that the economy in China is weak.
Demand softened.
Demand
And
is
look,
softened,
and when
okay.
it comes to China, you bet on China, and when it's thriving, you benefit.
Right,
When it's declining,
right.
ultimately you see the negatives, and that's really what happened today with Tesla.
Okay, so that's good. So we're checking off the boxes here, and now let's talk about oil for a minute. Look, for me, people often ask me, what do I think about oil, what not? For me, when I don't look, when you have players in a sector that really control the market, and they don't call me and tell me what they're going to do. Look, we know there are a couple of names. There are 4 or 5 major producers. Obviously, the Middle East is a big part of it, and obviously having a war going on in the Middle East, also in Russia and Ukraine. Oil is a big part of that. The fact that there is a questionable scenario of what happens here. We are at the forefront of 2 major wars going on in their area, right? Whether it's the boats trying to get through the Suez Canal and having to go all the way around Africa and spending 3 weeks as opposed to 1 day going through there. Major costs there. The risk of the fact of pirates. The risk of the fact that we've got a terrorist war going on, which leaves us with, we don't know what's going to happen. That you believe that's what's happening with oil right now? It's ticking up.
Yeah,
okay,
and,
so it's
and then everything, it's a spider web.
Right.
Because as that goes up, from a lever perspective,
Right.
the Fed doesn't want to see oil go up.
Right.
They want to see oil go down.
Right.
Because so that as oil goes up, that counters deflationary things that are happening.
Okay, so think about that. So the things that we use on a daily basis that are affecting, obviously, it's food and energy. Everybody's driving a car. Everyone heats their house, right? And has air conditioners coming into summer. So obviously, the price of oil is a big factor. What do you think about an election year? Do you think there's any? I mean, I'm a firm believer, and I've seen many election years, and my sense of it, even in this is probably an incredibly one of the most unusual election years we'll ever see. Do you see any effect? I'm often one to say that whatever's happening politically has really minimal effect on what's going on in the market. Do you see?
As long as you have a split House and White House. In
Right.
other words, as long as you have a Capitol that's split
Right,
red and blue,
visually 50-50.
in terms of control, that's bullish. Like I think that is really what the market's focused on in terms of whether it's the Senate or the House.
Right.
To make sure it's a split House. Relative to what we see.
Do you think a market favors one of the candidates or another?
I think right now, I mean, I could tell you, like in all my investor meetings, I mean, maybe a little favoring, or at least talk in terms on the Trump side.
Right.
But as we know, that could vastly, quickly change.
Yeah, it can.
Going to where we are in April before November.
Yeah, completely. Oh, I love this. Okay,
Great.
this is, so look, one last thing, and I know you've got to go. Tech, where we are right now, looking at NVIDIA, can you give me a couple of, what do you see as the next 6 months and a year in that whole sector?
Demand, we are still in the early innings of this revolution.
Right.
It's a 1995 moment, biggest tech transformation in 30 years.
Right.
The question now, it's actually less about NVIDIA, it's more about the second, third, fourth derivatives across software, across tech, names like Dell, Oracle. That's the key now. You have to see the tidal
So the components,
wave.
the companies that are making the
You
components.
have to see the tidal wave spread out,
Right.
not just NVIDIA, not just Microsoft.
I will ask you one last question and I will let you go. February of 2023, NVIDIA was trading at $108. It is trading at $900 now. What happened in that year? First of all, what happened that took it from the 3s and the 400s to that level of 108, right? And then we know what's taken it since then. But that is like, did suddenly everybody wake up? Did NVIDIA do something different?
Microsoft buying OpenAI was key, right, in terms of just broad distribution of generative AI. The technology reached prime time.
Okay.
And companies basically recognize what the godfather of AI, Jensen,
Right.
was building. And many didn't believe him
Right.
and NVIDIA. Now,
So that is so fascinating. So excited to see the history and the trajectory of companies. Right there are. I'm sure. Look, people were looking at Apple in the beginning, going, "This is not happening." People didn't recognize what the future looked like, and then suddenly a switch went off, and it was like they got the recognition they needed, and they did that. And clearly, that's happening in AI.
but that's the nature. Like, look, a month ago, if someone told you NC State was in the Final Four, you'd
Right.
say they're not even going to the tournament.
Right.
Now they're in the Final Four, so you never know.
Boom. We're here with Dan Ives on Einstein and Ives, the new podcast. It's taking the world by the storm. My man, it is absolutely an honor to be here.
Awesome.
Next time, hopefully, we're going to have our sneaker line coming out and you guys are going to see it. And then once the weather gets good, we're going out on the road. We're going to start traveling to amazing fashion stores in New York City. We're going to be putting on some clothes. We're going to be talking about sneakers. We're going to be talking about food. The world is our oyster, and we got a lot to say, and that's all I got to say about that. My man,
Awesome.
Dan Ives, Einstein and Ives, coming to you from, boom, the balcony at the Stock Exchange. And that's all I got to say about that.